Tesla just had its profit call in the final quarter of 2025, revealing the company's noteworthy figures. Tesla CEO Elon Musk also gave updates on certain projects that are scheduled for 2025. There may still be some unresolved issues regarding Tesla's plans for the year despite all of the issues that were brought to light during the profit call, especially in relation to the building of more gigafactories, which is an essential prerequisite if the automaker is to achieve massive production levels this year. Tesla has revealed their fourth quarter profit for 2025. The automaker topped Wall Street's 1.13 cent expectation with a 1.19 change in earnings per share. For the most recent quarter, the company also revealed a 100 megawatt solar standing in the most recent quarter, which is greater than it was the year before. Furthermore, the energy capacity rose to 2,462 MWh, which is larger than it was the year before. Tesla delivered for 105,000 to 178 electric cars and built for 139,701 new cars in the most recent quarter. These figures grew in proportion over time. The automaker also gave an update on the main incentives for the year. According to Tesla, the company is on track to soon begin manufacturing the much-anticipated Cybertruck at its Gigafactory in Texas. It also stated that its cutting-edge automobile platform was still in the planning stages and that further details would be revealed at its next Investor Day on March 1st in 2023. Tesla aims to reach the 50% manufacturing milestone with 1.8 million vehicles. The business declared that it remains committed to achieving its goal of 50% yearly expansion in production. Tesla admitted that there are worries about the short-term consequences of an uncertain macroeconomic environment as it enters 2023, particularly in view of growing interest rates. The automaker continued by saying that its employees are used to challenges because of the tenacity required to develop the business to where it is now. Although some plans for Tesla were disclosed during the last earnings call, the firm did not directly address its goals to build further gigafactories. Does this raise any concerns for Tesla investors? There will be more videos like this one. But before we get started, if you like this kind of information, please remember to hit the like button, subscribe, and turn on notifications so that you may be updated on anything pertaining to Tesla. Tesla had long stated that it intended to build more gigafactories in various locations across the globe. The Middle East, Canada, and another area in China are the most frequently mentioned potential sites. On its most recent results call, the company did not, however, make any information. Elon Musk declared during Tesla's annual general meeting of stockholders in August 2025 that the business will report a new gigafactory location before the year finished as production increased to satisfy enormous global demand. This did not, however, occur, and there is no assurance that it will this year either. In a similar vein, Tesla and the northeastern Mexican province of Nuevo León have not yet agreed to build an electric vehicle assembly plant. The state has yet to come to an agreement with Tesla. According to Deputy Secretary of Economic Development Jorge Per Emmanuel Liu of Nuevo León, he added that he doesn't know if a decision will be made this year. However, current reports indicate that Tesla's new gigafactory would probably be built in Mexico, more precisely in the T-Max area, a brand new industrial district. Tesla believes that by investing here, it will be able to utilize the potential of its Santa Catarina airport, according to Jesus Ramirez, a spokeswoman for the government of Mexico. Due to its ability to use air freight for shipment and distribution in common in the EV industry, this will be critical for Tesla. In related news, demand for Tesla's rivals is currently declining globally as a result of its recent price cuts. Shortly after the automaker reduced its prices, sales of Tesla in China rose 76% to 12,650 for units. According to data from the China Merchants Bank, in January, Tesla implemented the same price reduction strategy in the U.S. to jumpstart the year. Despite the fact that January sales figures are usually lower than December's, analysts are reportedly becoming increasingly convinced that Tesla's market pricing reductions are increasing EV sales in China. A recent study in Shanghai, China, found that Tesla's significant discounts on its Model 3 and Model Y cars diverted buyers' attention from Chinese-made smart EVs. In January, Tesla's price cuts in China, which reached 60%, had a significant negative effect on rivals NIO, Li Auto, and XPeng. These three businesses had steep drops in January's monthly and year-over-year sales comparisons, after Tesla increased demand by cutting Chinese auto prices by up to 13.5%. NIO delivered 8,506 automobiles in January, which was a decrease of 46.2% from December 2022 and 11.9% from January 2022. Li Auto shipped 15,141 units last month, which was a 28.7% decrease from the month before and a 23.4% decrease from January 2022. XPeng saw the biggest fall, with sales down 53.8% from December and a startling 59.6% from January of previous year. It is well known that when a dominating company cuts prices, all of its rivals are forced to follow suit. In the case of Tesla, this is developing gradually. Ford recently announced that it was reducing the price of its Mustang Mach-E electric SUV in order to compete with the Model Y. The price reductions may vary from approximately $900 to approximately $5,900. Depending on the car options, this was clearly a reaction to Tesla, as Ford's chief customer officer for its electric vehicle segment, Marin Jaja, admitted that the company was responding to market changes. However, is it possible for other EV manufacturers to match Tesla's pricing advantage? Probably not. Tesla is quickly assuming the lead in the EV market thanks to a significant competitive advantage that allows it to cut prices while keeping high profits from its vehicles. The manufacturer makes large profits on its electric cars, whereas many large manufacturers still sell their cars at a loss or barely making ends meet. And things might get even better for Tesla because it may still cut car prices this year. According to industry insiders who work with the business and its suppliers to Tesla are preparing for pressure from Musk and his team to further lower their costs, as the industry leader in electric vehicles aggressively lowers vehicle prices in a faltering economy. Tesla CFO Zach Kirkhorn's declaration that the business is focusing on all cost centers, including the auto supply chain, and will work closely with suppliers is the source of this concern. During the company's quarterly call last week, Musk also hinted that a recession could lead to significant reductions in almost all of Tesla's input prices. Tesla expects to produce an average of 20,000 cars at its Shanghai facility in February and March. This would effectively bring production back to September 2022, when the facility was producing the greatest number of Model 3 South in order to deal with excess inventory. Tesla's strategy involves a 33% production slowdown in November and an extension of the Lunar New Year holiday for staff in January. Tesla's price cuts are a huge help to the automaker, as President Elon Musk recently disclosed that orders were nearly twice as high as production in January in China alone, where daily retail sales were nearly 36% higher than the same period last year. Musk claims that Tesla could increase production from 1.3 million vehicles in 2022 to up to 2 million vehicles this year. In related news, it was recently revealed that Tesla had made some of its charging stations available to electric vehicles made by other automakers in Australia. The Evan Energy firm declared at the start of February that all electric vehicles may be charged at 5 of its stations spread around New South Wales. The chosen superchargers may be found in Armidale, Tamworth, Jerry's Plains, Bathurst, and West Dubbo. The price will be greater even though this could have a big impact on Tesla. The company plans to charge a non-Tesla vehicle at a Tesla station for roughly 70 cents per kWh, while charging a Tesla vehicle at the same supercharger normally costs between 58 and 70 cents per kWh. However, if non-Tesla owners purchase a charging membership, which costs roughly $10 per month, that price reduces to 66 cents per kWh. Tesla started offering superchargers to non-Tesla EVs in several European nations in late 2022, and the company has since increased the number of non-Tesla car superchargers in the UK and Australia. The company has been working to take its non-Tesla supercharger pilot program to new locations.